So hello everyone and welcome back. So over the last 48 hours, crypto has done something very interesting. Now Bitcoin bounced, Ethereum started outperforming, altcoins woke up again, and yet almost none of the biggest moves were actually caused by crypto. Now instead, the entire market has been trading on one thing, the Iran-US situation. And if you've been wondering why Bitcoin suddenly stops falling and why risk assets have started recovering, that's exactly what we're going to break down today. Now we'll cover what's happened in crypto, what's happening geopolitically, why oil matters more than most crypto traders realize, and the one thing I'm watching over these next few days that could determine where the markets go next. Now of course, let's start with the biggest story we've got. Now over the last couple of days, markets have actually become increasingly optimistic that the Iran-US situation is actually moving toward a big de-escalation. Now, why does this matter? Because this isn't just a geopolitical story anymore. This is actually an inflation story and an oil story. So ultimately, it's a Federal Reserve as well. So one of the biggest concerns that investors actually had was the possibility of disruptions around the Strait of Hormuz, which is one of the most important energy shipping routes on the planet. Now, if oil suddenly spikes because of conflict, inflation rises. And if inflation rises, the Fed has less room to cut these rates. And if rates stay higher for longer, of course, that's usually bad news for risk assets like stocks and crypto. So when reports started emerging that both sides were moving closer to an agreement and that the shipping activity was normalizing, markets immediately reacted. And that's actually why we saw oil cool off while Bitcoin and equities started bouncing towards the upside. Now let's talk about Bitcoin. So the biggest thing Bitcoin has done over the last 48 hours was actually surviving. Now that might sound boring, but it's actually very important. So just a few days ago, traders were actually questioning whether we were about to see much of a deeper correction, maybe towards a deeper level of, below 60K. And instead, Bitcoin found buyers. So as geopolitical fears eased, Bitcoin climbed back into the mid 60 range. Now we're sitting at a price of about 66.5K. So short sellers actually got squeezed in the process. And what makes this move very interesting is that it wasn't driven by the ETF approval. It wasn't driven by a major protocol upgrade, and it wasn't driven by some huge crypto catalyst. It was driven by macro. And there's another reason traders are paying very close attention. Now, ETF flows have finally started to appear to be stabilizing. So for weeks, one of the biggest headwinds for Bitcoin was persistent outflows for spot Bitcoin ETFs. And that pressure now appears to actually be easing. So when you actually combine the stabilizing ETF demand with reduced geopolitical stress, it creates the conditions for a relief rally. And now the question is pretty simple. Can Bitcoin actually hold these levels, or is this just a temporary bounce before another wave of volatility? But with that, we will see in the upcoming days or weeks. So make sure you subscribe so you don't miss out on a single thing. Now, while everyone actually focused on Bitcoin, Ethereum was quietly doing something very interesting. Now Ethereum has actually been showing some relative strength. And historically, that is one of the first signs that traders watch for when risk appetite actually starts returning. Now, before anyone starts screaming alt season, let's calm down. We're not just there yet. So what we're seeing right now is much more like a relief rally than the start of a full-blown speculative cycle. So a lot of recent winners, whether it's Ethereum, Solana, XRP, or some higher beta plays, are simply recovering after getting heavily sold during that recent uncertainty period that we had. So a relief rally is traders buying back risk after fear subsides. An alt season is fresh capital aggressively chasing risk. And right now, this still looks like the first one. And now, until we see a stronger evidence of new money entering the market, I'd be careful about assuming every green candle means the next bull run has officially started. So what are institutional investors and large traders actually watching right now? Honestly, it's not some obscure altcoin, it's not a meme coin, and it's not the latest crypto drama. Of course, they're watching the four main things: the Iran and US situation, oil prices, ETF flows, and of course the Federal Reserve expectations. Now of course, if tensions do seem to stay cool and are seeming to ease, then we may see oil being contained, and if oil stays contained, inflation pressure eases as well, and if inflation pressure eases, then ultimately we get the Fed being more flexible. And now if the Fed becomes more flexible, risk assets tend to benefit. So we may see a chain reaction in the market currently pricing in. So overall, crypto has been trading geopolitics, not memes, not narratives, not hype, straight geopolitics. So the market is essentially betting the de-escalation continues, oil remains under control, and ETF demand stays healthy. Now, if that happens, this recovery has room to continue, and if it doesn't, volatility could enter very, very aggressively. So now over the next few days, keep an eye on the Iran-US developments. We are looking to sign the deal on Friday, but we will see how that actually unveils. So now also watch obviously the oil prices that we have, and then follow the ETF data. If we continue to get ETF outflows, then it won't be looking, and of course seeing if Bitcoin can continue holding its recent gains. Because right now, this is the real story that we've currently got. Now, before we wrap up today's video, we've got some exciting opportunities now on Evedex. Now, if you're looking for a new decentralized platform that allows you to trade directly while maintaining control of your assets, Evedex is that platform worth checking out. Now, one of the current things that we've got going on is running a prize and reward campaign where active participants actually have the opportunity to compete for prizes including iPhones, AirPods, and Apple Watches. So if you're already trading and you're looking for an additional incentive, it may be something worth checking out. Now, as always, make sure you understand the risks involved with trading, do your own research, and never trade with money you cannot afford to lose. But if you'd like to learn more about Evedex and see the current campaigns they're running, you'll find a link for that down in the description below. Also, they've recently added funded trading, so for a small fee, you can actually get a very nice amount with zero profit share, which is absolutely crazy. So make sure you check that link down in the description below. Now, as always, hit that like button, that'll be greatly appreciated, and I'll see you all in the next one.